Thank you for joining me. I'm Juan Lee, trader and founder of Prosperity Trade. In this video, I got a swing trade play that you're going to want to watch. It's ticker symbol GRWG, and I'm bullish on this swing trade. You're going to want to watch this video. So the ticker symbol is GRWG, and we'll kind of go through their investment page and discuss what they do and just kind of briefly just do an overview. So these are some of the items that they sell. They're the largest hydroponic supplier with 58 stores in 12 states. They recently made an acquisition too, so you'll see that on their financial sheets. So basically with this company, they focus on the agriculture industry, and they're trying to they claim they're trying to meet the growing demand for grains and food leads to the search for high yielding farming techniques. So they're trying to use precision farming and what they call urban farming. So they call this vertical farming, and this is the practice of growing crops in vertically stacked layers. It often incorporates controlled environmental agriculture, which aims to optimize plant growth. And they have three techniques to achieve this. They can do it via what they call hydroponics, and this refers to the technique of growing plants without soil. So there's no soil involved. It involves the roots of the plants are submerged basically in a liquid solution containing macronutrients such as nitrogen, phosphorus, sulfur, potassium, calcium, magnesium, as well as trace elements such as iron, chlorine, zinc, copper. So that's one technique. They have hydroponics. So the second technique is aquaponics, and this takes hydroponics one step further by integrating the production of the plants with production of aquatic organisms in a closed loop system that mimics nature itself. So the third technique that they have also for filling this is aeroponics, and this was motivated actually by NASA to grow plants in space. So these are the three techniques they have for growing plants. And, you know, like a lot of people were calling this, when I first started looking at this, they started calling this pretty disruptive. They're going to change the way farming is going to be done. And that's what caught my interest a while ago. There was so much hype when this was trading. And this was trading so high. And when I did the DCF, I was like, okay, I'm just going to wait for it to come down. And that's a part of investing and trading. You have to set your price. If you feel it's overvalued, no matter how good the company is, if it comes back down, good. You look at it again, like I'm doing today. If it doesn't, then if you don't buy anything, you don't lose anything. So I didn't lose anything by not buying it. And I didn't miss out on anything because it thing pulled back quite a lot, and it caught my interest. I'm still on the fence regarding, is this a long-term play? They have a couple of red flags that's stopping me from investing long-term and just playing this as a swing trade for now. But with their hydroponic market, the type of crops that they're set to grow are tomatoes, lettuce, leafy vegetables, pepper, cucumbers. So they talk about some of the opportunities they have for just expanding their business. And they've done well. I mean, year over year, their financials have grown. They haven't been able to keep up yet where they're extremely profitable and they have a bunch of free cash flow. They're not there yet. But I do think they're getting close to it. I do think they're getting close to the point where they're taking control of their debt. They're taking control of their costs. And they're kind of like leveling it out. And maybe within the next year or two, they might get to that point where, okay, now they're in control of their finances and it's all up for them right now. To me, right now, their revenue is growing tremendously. It's incredible how well their revenue is growing, but they're still issuing a ton of shares to keep up with their projects. They're still making acquisitions. So they're doing things to grow their company, but based off their free cash flow, it may not seem like they're properly valued right now. And that's kind of where I'm at, like on the fence of, do I want to go all out and invest? You know, one of the reasons it had the big drop, and we'll talk about that when we pull up the chart, but there was actually a firm that did a short report and wanted to short this company. and they blamed dysfunctional management as one of the key things. And there was another company that I invested in, and when the short report came out, it dropped so much, and it was affected by that short report. And it didn't help that in one of their quarters, they missed their earnings. So that didn't help either. And it dropped like 40%, I think, from the high. But you see here their quarterly revenue growth, and this is their presentation. So of course it's going to show only the highlights, basically. Their gross margin profits. I will say that the last 2 years they have been profitable. Their net profit has been profitable. So let's take a look at their chart. So I saw this company around here when it was so much hype. I did my due diligence and I put it to the side because it was just way too expensive. And I made the right choice. You know, it's spiked down, spiked up, and it just been on this downtrend. And it caught my interest because it tapped 20 a few times down here, and it tapped 20. And this is the first time, if you kind of look at here, it's like the bears were still in control here. The bears were still in control here. It seems like here the bulls are taking over, and it's crossed a couple of moving averages. The RSI is starting to trend upwards, the MACD cross. So it seems like for a swing trader aspect, it seems like it's ready to start the trend upwards. But what I like most, it has clear defined support. So support's been here in about 2056, 2070. So you can buy an option, hedge your position, and know your exit strategy. Those are my favorite types of swing trades, where I know my entry and I know my exit. I know where my profit target is, and I know where my stop loss is. This is not the usual video I would do. It would usually be a lot quicker, but I've done research on this company, so I know a little bit about it. It's not like the typical swing trade where I just purely going off of technical analysis and, picking a price target. I want to talk a little bit about the company because the company does interest me. So let's look at their financials. So look at their revenue growth since 2014. Here we have 1.4 million to 3.5, 8, 14, 29, 79, 193 million. That is look at the growth, 139%, 130%, 79, 100%, 174, 142. The year over year growth is just been amazing. So that's a good thing. And if you look at their operating income since 2019, they're finally been profitable. And what's more impressive is that they're finally profitable with their net income. So what that tells me is that they're paying off their cost. They're paying off what it cost them to make this revenue, and they're having their after they pay off their selling, general and admin expenses, depreciation, and other expenses, they're able to have some profit, some cash here, which is a good sign. You see here that they've always had negative net income, and it seems like it's just turning around. So that's a good sign as far as fundamentals. Also, as far as swing trade is concerned, they will be having earnings on the 11th. And I truly feel, just based off of their trailing 12 months, just based off of looking some of their sales and looking how they're expanding and how they made some acquisitions, they're expected to have earnings per share of 0.09, which would be 50% higher than the previous year. And I think if they do beat their earnings, I think there will be a spike. And usually I don't like to play any swing trades between earnings. It's just so unpredictable. But I think I'm going to jump in this, and the risk for me is worth the reward. I think it's going to start trending upwards. And if it doesn't, and I know where to exit. That's the most important thing. I have a plan. I'm going in there with a plan. I'm not just letting it let my losses build on me. So that's important. You always have to have a plan. So that's good with that. What's terrible is the way they've been acquiring that money. They've been diluting shares like crazy, meaning this was their float, how many shares were outstanding. and it just increased from 9 million to 14 to 23 to 33 to 46, 56 million. They've just been diluting it. So what that tells you, that as an investor, it's good and bad, right? This is how they're reinvesting in themselves. They're issuing shares to raise money as opposed to taking a loan, and they're reinvesting. And they have, I looked at their financials. They made some acquisitions. So they're trying to grow. They're adding stores. They've been hiring employees. So their workforce has been increasing. But also as a shareholder, you don't want to see more shares diluted because you get less piece of the pie. It just all depends what the company does with the money that they acquire from issuing shares. So we look at their cash. Cash has been increasing, and their total assets, 452 million. Total liabilities, 89 million. So here I was talking about the employees. They only had 23, 28, 40, 54, 96, and they jumped up. This is a big boom. Look, 195, 384, 671 employees. That's a huge increase in workforce. And if you're not a growing company, you wouldn't have so many extra employees. You wouldn't have to hire, double your staffing. So these are good signs. These are just telltale things that I've already liked this company for a while. I had this information here in the back burner, and they're starting to transition a little bit. It's difficult to invest like this. It's always a risk as opposed to a value stock where it's a good company. It's been around forever, like an Apple or Microsoft or an Intel or whatever, and it dropped drastically and it's undervalued. I mean, that's pretty easy because you know your buffer, you know your safe space. Finding these growth stocks are difficult. They're higher risk, but I like to have a mix of some of these growth stocks along with the value plays, just because of the rewards that come with these growth stocks are tremendous. And to be honest, it's fun for me. It's fun to investigate these companies and look at it as it's going to be the next disruptive, whatever. These guys are just going to disrupt the farming. The term disruptive is overused, I think, but they're definitely going to bring something to the table that's not available, and they're going to offer some solutions that are much needed. The farming industry, we're just growing in population, COVID issues, weather issues, storms. We need to find a different way to farm, and this company is addressing that. So their free cash flow is been in the negatives, and it was even higher in the negatives this year because of, when I looked into it, it was because of an acquisition that they made. So we go here, Yahoo Finance it does have cash. Their free cash flow, and you see here they've negative 2 million, negative 5 million, negative 14, and this year negative 12 million. But they did make an acquisition, so that would So we look here on Seeking Alpha. They kind of take their year-over-year growth and compare it to their industry. They don't always compare it to the same sector. They just pick stocks that are close to it, but the automation in the way that it picks companies that are within the same sector is not always that accurate, and you do have to do your own research. But these numbers are great as far as kind of giving you a sign that this company is growing. Look at their year-over-year growth, their EBITDA growth, their EBIT growth, their EPS diluted growth. So just all great signs. This is important. I would like to see a larger free cash flow growth, which they don't have currently. I'll take a quick look at tip ranks every once in a while. I do look at this just to see what analysts are saying. And there are some analysts that are bullish on this. This is 18, 19, 20 days ago, so pretty recently. And they're targeting at 45, 40, 35. And the stock is currently trading at 22. So there's other minds thinking of the same thing. These guys don't have a high success rate, but okay, so he has a high success rate and he's saying 60, but that was 3 months ago, 55%. So just something to look at. Okay, so this is a swing trade. So there will be a focus on technical analysis. So what I got here in my chart, this volume shows where, as far as price-wise, where there's a lot of volume. And that's important because that tells you where support is, meaning that if it drops to that area, there's most likely going to be, you're hoping that people will buy in these areas. So I like this area here. It seems like there's a lot of support. I wish it would have dropped maybe a little bit more. 1950 would have been a better entry, because you see all the volume here. You see here in the past it's bounced. So that's a better support, but I do feel like it's possibly starting to trend upwards. So you see here it bounced and it kind of passed some of these moving averages. So this is the trend downwards that we've been having for quite a while. Quite a while it's been trending downwards, and it's just starting to see here for the first time it kind of spiked over these moving averages. And you look in the past, it didn't really spike over the moving averages much and just kind of flushed out. So this is maybe a positive sign that it's going to start trending upwards. So as far as support and exit, if the last ticker down here, 2058, if this isn't able to hold 2058, that to me, I'm getting out. It's currently at 22, so it is a ways down. So if that's too much risk for you, then I'll give you a few options that you can do where you can hedge your own position with options and buying a spread, and that might be safer. If you're like me, I'm fine with losing $1 risk, just because I have more than a 70-80% success rate with my swing trades, and you can check some of the previous videos I've done where I did some swing trades. So that's the plan for this. So the way, if you want to do this as far as with options, you can just buy a long, and I would buy the January 21st, 2022. They're $2.79. I put here buy 5 if you want to, I wouldn't buy less than, for me personally, I wouldn't buy less than 5. You're risking about $1,300. You're not really risking $1,300, because if it dropped to 2071, then we can go here and look 2080. So this will be your risk, $390 risk for, depending on what day, with options, as day passes, it loses value. So, you can lose anywhere from 365 to, let's say, by the end of December, $800-900. So that's your risk with 5 of them. If you want to just buy one, then it'll drastically reduce this, but also your chance of making profit would also drastically reduce. Now, let's say it reaches my price target of around $26 or $25.54, then your profit potential is anywhere from 800 to 700 to 335, depending on how quickly it spikes up. So that's if you buy 5. I probably end up buying, I think 10 I would end up buying, just to make it a more lucrative and better deal for me. So now you see my profit is potentially 25, 50, 26, $1,800, 17. And this is what I like to make. I don't like to jump in the trade and make less than 1,000 or 1,500 if I'm going to hold it for a few weeks. So if this is too much risk for you and you can't stand the ups and downs, then buy a put spread. So the way you would do that is a long put. You would write a put, meaning you would sell it and sell the January 21st, $17.50 put, and you'll get a credit. And you'll buy a put, the January 21st, $15 put. And now you've mitigated your risks. So if it drops, you're losing only $50 or whatever, but you're also, putting a cap on how much you can make. So $50 if it reaches your price target per contract that you make. So you can, at that point now, write out 10 contracts and your risk will be less. Now, the good thing about this, and I still may do a put spread, the good thing about this is because if I write a contract at $17.50 and it drops and my contract gets exercised, then I'm issued that stock at $17.50 and I sell this stock to cover the losses, making me either even or green. And now I'm holding 100 shares of GRWG at $17.50, which is a very, very smart play if you're bullish on this. So I may do both. I may do a long because of the swing trade potential, but I may also do this put spread because I do kind of like the company. I would like to get in at this price. I'll feel a lot better if I had shares at this price for the long term. If I got in at this price, then I would have no problem holding it for the next year or two or whatever. And one last thing I want to look at, this the DCF that was initially made when I first did my due diligence on this company 7 months ago. So I haven't updated it, so it doesn't have anything from 2021. But I'll kind of go over it, and I think the numbers still can give you a close prediction or educated guess on what this company should be trading at. Okay, so this just kind of goes over their revenue by market, where they're currently at: Colorado, California, Rhode Island, and it just shows you how much revenue they've made from each market. This goes over same store sales. This is the kind of the thesis, where how much market share are they grasping? You know, currently they have about 0.8, 2.1, 4.8. We're predicting that they're going to get about 10%. And as you go with each thesis, so you can have a bullish thesis, bearish thesis, and a base thesis, you obviously increase accordingly. If you're bearish, then it's going to be a lot less of market share. So it gives you 3 different price predictions based off of how you feel about it. Like I would probably be base for this company. I'm not quite bearish yet, but I wouldn't be bullish either. So my estimate would be somewhere base, or I would probably look at the base and bearish and just pick somewhere in between that, because I don't have the ultimate confidence yet. So this takes all into the numbers. It takes the capex, their property sales, property and equipment schedule, just all their cost and everything it takes for them to keep that revenue, and it forecasts it years ahead, brings it back to a certain value, and it gives you an intrinsic value. And that's just a summary. I mean, it's a little bit more detailed than that, but we do have a DCF video. So this is the base model. So the base model, based off of this, the intrinsic value I would give it is 34. And if you look at the tip ranks, that's pretty close to what I had, 35. I had 34. Some had 40, 45, 63. So I would imagine when we put the bullish, it might be some of these numbers. And let's check. I don't even remember what it was, but let's see how much the bullish case is. Oh, 44. Okay, so not exactly as high as the other tip rank analyst, but you have here, look, you do have here, he's predicting 40, 45. So these are bullish 45, and these guys are extremely bullish. So I'm not there yet. Now, the company that did the short report, this is probably the value that they gave it, and I'll give it the bearish. I guess my bearish thesis still has potential upside. I would say, honestly, bearish $28. That's a good number. I mean, so my price target for the swing trade is about $26.50. So this is pretty good. So this drop was good, and this is why it popped back up on my watch list, because it dropped so low. And I felt like it did a double bottom, and it's starting to pass some of the moving averages, which is a possible indicator that it's making a swing trade. It's starting to change in momentum. So that was my thesis. That's my swing trade. Remember, these trades can get tricky. They can get volatile. So have your stop loss. We've already established in the video what the stop loss is. So stand by the stop loss. Even if it drops below the stop loss and then it reverses, at least you had a plan. You always have to have a plan. Always stick to it. That's how you have longevity when it comes to swing trading. It's the traders that have a plan, and then next time they don't follow their plan again, those are the ones that end up always getting burnt. So don't be that trader. Have a plan, and let's hopefully make some money together. And thank you for joining me. See you on the next video. Don't forget to subscribe, comment, and like. Thank you.